We hear so many times that inflation has nothing to do with monetary factors that it's almost laughable. But the reality is that when they say that inflation is due to the rise of energy prices, the rise of commodity prices comes from what? Much more money, a lot more money going to relatively scarce assets. When they say that it's because of the supply chain disruptions, what are supply chain disruptions but a monetary factor, i.e. more money going to relatively scarce assets? It is impossible for freights or for energy prices to go up all the time in an environment in which the amount of money is lower. Furthermore, if the amount of money was the same, if one of those prices went up, the rest of prices would go down or remain stable for a very simple reason. There would be no available money for the remaining assets and the remaining prices to continue to go up. There is only one way in which all prices go up in unison, which is the debasement of the purchasing power of currency, i.e. more money going to relatively scarce assets. Therefore, what has happened in 2022? Another proof that inflation is a monetary factor. We saw energy prices soar because of the war in Ukraine. We saw the price of wheat and the price of cereals going up massively because of the war in Ukraine. Central banks started to hike rates, 90 central banks hiking rates, and just that has made oil prices and wheat prices round trip and end the year in negative territory. It has happened also with other very significant commodities. And certainly the fact that China is slowing down helps. But we also must remember that the China slowdown is also a monetary factor. After decades of debt-fueled, money supply-driven growth, what we're seeing right now is a monster slowdown because of the burst of the real estate bubble and the zero-COVID policy. But ultimately, all of it is less money in the system. And less money in the system is what we need to defend. Why? Because right now, expectations of inflation are that inflation is going to come down rapidly in 2023. Maybe so, but it will probably come down to more than twice the level at which we would consider to be normal. Furthermore, central banks need to continue to hike rates and reduce their balance sheet because the pain that markets or the economy may suffer in 1 year is perfectly manageable. However, if we enter into a prolonged period of stagflation, which is something that we have discussed in these videos a few times, that is much worse for the economy, for investors, and certainly for citizens, because it's longer term, it's much worse, it hurts a lot more people, and it certainly is not as manageable as a short-term recession. Therefore, we must continue to defend rate hikes and the reduction of the balance sheet of central banks after the monster disaster created in 2020 that led us to this stagnating growth and this elevated level of inflation.